So will equities have trouble finding direction, or will they continue to rally? And what do you do as an investor? It's time now for our Market Week strategy session. Joining us from Laguna Beach, California, we have John Buckingham. He is Chief Investment Officer for Al Frank Asset Management and editor of The Prudent Speculator. He helps oversee $400 million in assets, and he says the economic green shoots turned a little brown this week. John, let's start with that since you point that out. What do you think about the economic recovery here, as we did see at least a drop in total unemployment benefits?
Right. Well, we saw some new green shoots, and we certainly saw some of the existing ones turn a little brown. You know, we had disappointing news out on capacity utilization. That Empire State Manufacturing Index came in on the downside from what was expected. Of course, you contrast that with the Philly Fed Manufacturing Index, which actually improved a little bit further. So there are a lot of cross currents out there. We saw some disappointing news on home builder sentiment, but then we saw strong housing starts. So it is an interesting time in the market where, interestingly, you got the like inflation, for example. You had some news out this week that CPI and PPI were really down, and yet you have people still worried about inflation. Of course, you have some people worried about deflation. So the markets have come a long way very quickly, but we're still down a long way from where we were a year ago. So a lot of cross currents out there. How
key is housing? Because for a long time, everyone was saying, hey, this is the crux of the issue. Now it seems that focus has shifted to employment and also to inflation. But we're going to get some housing data out next Tuesday and Wednesday. How key is housing right now?
Well, I think it's important, but it's not the most important thing. We've had some stability, certainly, in most of the housing statistics we've seen. But, you know, what we'd really like to see is the unemployment rate come down a little bit. I know that most are expecting it to go to double digits, and housing or unemployment is a lagging indicator. But I do think the housing market, and we saw even out this week, the American Bankers Association suggested that housing has bottomed. Certainly in many areas of the country, housing has stabilized and even ticked up a bit. So I do think we're nearer to a bottom than a top, obviously, in housing. But I don't think we have to see housing appreciate significantly from here to justify buying equities today.
What do you want to see as far as the labor picture? I mean, yes, it's a lagging indicator. We heard the president last week say he expects it to go to 10%. But what do you want to see as far as the numbers that come out weekly and monthly?
Well, this week we did see that, you know, continuing claims come down a little bit. We want to see that trend start moving in a better direction. We had 19 straight weeks of record high levels on that particular gauge. So I do want to see it start to stabilize at least. That's the first thing that needs to happen. You know, things have gotten less worse in a lot of areas of the economy. And that's really why the markets have rallied significantly, is that we had started to discount financial Armageddon last fall, and then Great Depression 2 earlier this year, and then even severe recession with no hope of recovery until 2010. And then all of a sudden we had these green shoots that started to make it look like we were going to rebound later this year. And it still looks like we'll start to see a pickup. At least that's what most of the economists are suggesting. And albeit modest, a pickup toward the second half of the year.
Exactly. You know, we were hearing a lot about a V-shaped or a U-shaped recovery, and those expectations seem to have waned, haven't they?
Well, yes, they have. And, you know, we take a very long-term view of things, looking out 3 to 5 years. And if you can take that investment time horizon, I think it's a great time to be buying stocks. But if you're focused more on the short term, I think that we have come very far very quickly, and we are long overdue for some kind of a pullback. We'll see if this week's downturn early in the week is something that leads to a greater decline. But certainly you can't go straight up, and it would be healthy, in my view, to have a little bit of consolidation here. Unfortunately, or fortunately, if you're long equities, you have a lot of people who are still stuck on the sidelines, sitting in cash, waiting to get in. And buying the dips mentality may take hold here.
All right, hang on. Actually, you know what? You mentioned sitting on the sidelines in cash. I've been talking about this a lot lately. How do you measure that? How much cash is out on the sidelines, and how much is normally there anyway? Because companies obviously need to keep cash in short-term securities.
Right, absolutely. There's a lot of noise, if you will, in the numbers because there is a lot of corporate cash that's parked in money market funds, in addition to a lot of people who put their money in the mattress thinking this is, you know, the worst economy and stock market environment in their lifetimes. And now they're starting to poke their heads out of the foxholes. And at this point, there's about $3.6 trillion in money market funds earning next to nothing.
All right.